Good evening, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hopefully you guys had a very nice weekend and a very good day in the markets as well. And in today's action, guys, well, it was a topsy-turvy day in the markets. The SPY and the QQQ ending green, most of your major sectors also ending in the green, but it was not so much of an easy day. We actually started off the morning quite red on the SPY, the Qs, and most of your major indexes out there. And then came a bunch of tariff headlines. We'd been noticing coming into this week that the market momentum was largely stalling around the highs here in the past 2 to 3 weeks, and we were highly anticipating more deals in terms of trade negotiations and in terms of tariff news updates, and today definitely did not disappoint. So the reasons the market started off in the red was of course based off the Friday news in which Trump was seeking to augment the tariffs on steel and aluminum up to 50%. Obviously the markets did not like that news on the Friday session, and we had a bit of weakness carry into the morning today. Additionally, adding to that weakness was some talks that China saying that US was severely violating the tariff truce. Some of the accusations were that Beijing said that the US violations of the agreement, including stopping sales of computer chip design software to Chinese companies, warning against using chips made by Chinese tech giant Huawei, and canceling visas for Chinese students. Now, obviously that did not sit well with the markets overall, but a bit later in the morning, we did have two top White House officials suggesting that Trump and Xi could hold talks soon, and that was reiterated by Scott Bessent this morning and Kevin Hassett, where Kevin Hassett came out and said that the leaders are expected to talk this week, talking about President Trump and President Xi as well, and that both sides have expressed a willingness to talk. So this was kind of a bit of a neutral news event overall in the afternoon. The reason in which we saw the markets really go from nothing to something in the later stages of the afternoon were these two headlines right here. Number one was that the White House was close to the finish line on some trade deals, saying some of the Treasury officials, the administration was continuing to make very good progress on trade negotiations, and that it was very close to the finish line on a couple of deals. Over the course of the weekend, it was rumored to be believed that some trade deals were going to be announced during the course of this week. And here we had further commentary that I think you're going to see a lot more deals that are announced prior to the July 9th timeframe, talking about the end of the 90-day tariff pause window, which I'll remind you ends in the first week of July. So we're kind of running out of time here. And then the markets kicked it into high gear late stage in the afternoon when we got this headline right here saying that the US was pushing for countries' best offers by Wednesday as the tariff deadline looms. So it seems as though the administration wants to wrap up all these trade deals before that pause is kind of lifted. In the draft of the letter, the US was asking countries to list their best proposals in a number of key areas, including tariff and quota offers for purchase of US industrial and agricultural products, and plans to remedy any non-trade barrier or any non-tariff barriers. Other requested items include any commitments on digital trade and economic security, along with country-specific commitments. And this is, of course, regardless of ongoing litigation. We know there's back and forth between the Trump administration and the courts right now as to are they actually able to use the Emergency Powers Act to enable all of these tariffs in the first place, or will they maybe have to pivot the authorization to different other sections of those trade clauses, right? So that was a lot of market action today. We know that the markets had been quite stale, but today we got a little bit of livelihood, which led to the SPY and the QQQ ending towards the upside of the markets and closing with a very nice solid green candle. So in today's video, guys, we're going to do a few key things together. Number one, we're going to be going over the charts. Take a look at all our major indexes, see how we are shaping up. Even though we are still trapped in a range, where is the momentum favoring right now? Is it to the upside, or is it still a little bit to the downside? Thereafter, we're going to go through our big tech names and do the exact same thing. Are some of these big tech names still at very good, attractive levels for either swing trades or long-term portfolio positions, in my opinion? Thereafter, we'll take a look at some of the market's biggest winners and losers of the day. Go through that list, see if there's any trades that we can identify there. And lastly, wrap it all up with a few portfolio positions from me, some of the trades that I took today, and some of the trades that we kept into the rest of the week, of course. And just basing off of last week's trading as well, we had a very nice week of trading last week, somewhat of a bit of a light week, but a lot of wins as per normal, you know, building upon our win streak that we've been having really in the last few weeks of trading. So this week, I'm fairly excited to present to you guys all the new trades that we had this morning. So stick around to the end for those. Without further ado, let's jump jump right into it, shall we? So the SPY up 0.56%, the Q's up about 0.79%, and you can see decent rotation across the market indexes. Although we didn't have some very powerful performance from financials and XLV, they still managed to close a little bit in the green. You can see that even better here by the heat map, to where some of the industrials today were a bit left behind, but consumer defensives for the most part, led by Walmart and Costco, did good. Big tech overall did good, except for Google. And then financials were a mixed bag. Healthcare was also a mixed bag, but the sectors finding a way to actually come to the upside. Energy had a good day today, and that was off of the back of some tensions reigniting between Ukraine and Russia, of course, which did push the price of oil up throughout the day. Now, moving on to the one-day relative, you can see that even better, to where most of all your major sectors were in the green, except for your industrials category, which leaves us on a one-week relative of everything still being up into the green. So nice consolidation range here at the top of an extended move, and no weakness to be seen just yet. All dips are still supposedly for buying, and we are having an accumulation range with which other people could derive to say is some sort of a bull flag, right? So if you take a look directly into the charts, we're going to dive into that right now. So taking a look at the SPY, we still have a very clear daily uptrend right now, and the bulls right now are just consolidating, right? It is somewhat of a bull flag, establishing that above our support level, 585 down to 575. Overhead resistance targets remain 600 up to 610, which is your all-time high range. So the bulls still remain in full control. Any dips in the indexes do often free up some trades, which I'll show you at the end of the video. And when the markets are kind of sideways, sometimes some of your directional bets won't play out as better as expected, especially not when it's not a trending market, right? So I know a lot of people in the comment section have been expressing some difficulties about picking direction and just getting chopped up by the range. My favorite strategy for playing ranges like this, quite simply, guys, is the wheel strategy, whereby we sell premium under the market, and regardless of where this range maintains, above support, below resistance, we're still getting paid every single week while the market kind of irons out those details. I'll remind you who's still in control of the longer term time frames. It is definitely still the bulls. Beautiful weekly uptrend, bit of a bull flag here above resistance. We'll see if they have it in them to push a little bit higher, but definitely no red flags right now. The bulls have not lost any major levels and seemingly also have not lost any momentum. Moving on to the QQQs right now, QQQ as well. Beautiful daily uptrend overall, nothing to see there. And they're kind of looking for a bit of an expansion, right? We will see if they can break above into the resistance zone, which is 524 up to 534, the all-time high resistance range. No red flags at all, guys. Not clipping below the lows of just 2 Fridays ago at this point in time. That would be a loss of the daily uptrend and a retest of the bottom level of support, which still stands 510 roughly down to 500 flat on the weekly time frames. Everything is still looking good for the bulls, guys. Momentum is still definitely pointing upwards, although a little bit slow in terms of the price action, right? But the bulls have not lost any control. That's what we clearly have to focus on. It is still a weekly uptrend, still in some form of a sideways consolidation range, which when you see that at the top end of a very large leg of weekly expansion, it is somewhat of a bull flag, and it is a sideways accumulation zone, which does favor the bulls since they do control those time frames. So please keep that in mind. But I know it's been very choppy for any longs, especially if trying to make longs on the indexes or perhaps some of the other names that aren't really moving too much. And trust me, in this market, there's a lot of names that just haven't done anything in terms of breaking levels in the past 2 weeks. Moving on to financials right now. Financials, same context, right? We knew we had a nice daily uptrend right now. They lost it, and now we're trying to get it back. So we will see, guys. If you break the lows, 49.55, that would be a daily downtrend, which would lead us into further weekly consolidation. Keep that in mind. The bulls still looking very healthy here on financials. Sideways accumulation for now, but pay attention to that low. If that low is lost, that would be your daily downtrend, and a bit more consolidation here on the weekly time frames. At least the bulls have tons of space. And in the event that, well, they're just shaping up for a sideways daily bull flag right there, might just be looking for the uptrend expansion. You would have to get above 51.50 to really show me that the bulls have a lot of momentum still in financials. Financials, not one of my favorite sectors right now to play, but one of my favorite names in financials is Berkshire, holding this range really well, 505 roughly down to about 497. This bottoming out process on Berkshire has been slowing down into support and could be warranting for a nice little swing trade to the upside. On to healthcare right now. Healthcare also trying to form some form of a local bottom here. You can see the price action has not moved much in the past 5 5 days. Many people have gotten chopped up by this range overall, guys. Just remember what we're trying to do, right? It is a, right now, sideways range of consolidation. If you break the lows of 2 Fridays ago, 129.51, that is the daily downtrend, and that will be further weekly consolidation, right? We know the weekly bulls are sitting pretty right now. They have a lot of defensive areas down here in the lower 120s, so keep that in mind. We are below the 200 weekly EMA, which traditionally has been a good area to pick up healthcare either as an index or individual names that are potentially crushed. I myself do want to play the index, and I do have a new trade on the index, which I've been hinting at for the past 2-3 weeks. Some of you guys have been watching the channel. You obviously know what that trade is already, and I'll show you that one at the end of the video, of course. And if we break to the upside, guys, well, we really need to break 135 to the upside here. Give me the daily uptrend, show me the expansion is underway, and show me that we do have some established weekly lows, and try to make some upwards momentum into a new weekly uptrend. It will take some time, but as of now, the bulls are playing pretty good defense. On to semiconductors right now, which will be your best performer of the day. You can also see it's a very choppy area, right? The time frame that makes the most amount of sense on most of these indexes is the weekly, right? Beautiful leg of weekly expansion, and then you have consolidation here in the top quarter of the move. What do I mean by that? This is 100% of a move. When you see consolidation at the top end of a move like that, it means the bulls do not want to give back too much ground. They are accumulating, in other words, a bull flag, and potentially looking to make another move here into resistance. That resistance stays put 247 up to 260, so not looking too bad there, but definitely no breaks to the upside or to the downside of this very tight trading range. You get a break to the downside, very easy, guys. Daily downtrend into support, 232 down to 212. Just going to be extended weekly consolidation. Maybe the bulls need to join their friends down here in this very big support range, get some more momentum, and then try to fire off one more to the upside. Or if they just try for the break, guys, we'll keep an eye on that too. But everything, look for semiconductors, not looking too bad. And now lastly, the IWM Russell. So the Russell growth stocks, same concept, right? Bit of a lackluster performance by growth. Overall, the context here was a daily downtrend as we have the lower highs and lower low pattern here. They're trying to reset. The bulls are trying to reset right now. Nice push, trying to establish the higher low and trying to go for the daily uptrend, but still no actual trend, no clear direction. Resistance stays put 208 up to 217, and support stays put 200 down to 188. So this one pretty much looking like the SPY and the QQQs, but the move on the weekly is consolidating in the top 25% of that area. Accumulation range, and any positive news, I assume, with any positive trade deal announcements this week, could send this one into the resistance zone for a bit of a leg higher. That is pretty much everything for your overall index recap. If you take a look at the VIX was actually higher on the morning by about 7% and then wound itself down for the most part of the day. So keep that in mind, guys. The VIX is still somewhat low, especially in comparison to what we have. So nothing much to see here, guys. Still a decent environment in which to be selling options. The dollar as well maintains its weakness as we approach the lows that we had a few weeks ago. $98, guys, is going to be the flush zone overall. The bulls are desperately trying to hold on to some space here and try to bring us back in the resistance range, which is 100.75 up to 102.75 overall. So the dollar has been somewhat notoriously weak as of recently, but you know, it's a very complex trade with many moving parts. Moving on to the 10-year yield right now into yields and bonds. Well, we know that the yields have been, you know, astronomically high, and it is putting pressure on a lot of sectors, especially on the real estate market, which is really slow right now. So 4.5 seems to be the breaking point. Whenever we pull up into there, something comes out that kind of sends us lower and alleviates a bit of the pain there. We're going to be watching for this possible head and shoulders to be forming for a bit of downside momentum. I assume if there's maybe more trade deals that are announced, we might get a little bit of a kick down here on the 10 and possibly on the 20-year yields as well. I still do believe that in these heightened areas, guys, it's a great opportunity to possibly be loading up on bonds if bonds are your thing, if you like bonds, but always keep an eye on the fact that this trade is going to take a very long time to play out. Think at least in terms of months, not in terms of days, not in terms of weeks. If you're positioning on this, your time frame should be expressed in terms of months overall. Taking a look at gold now, gold had a phenomenal day overall, guys. Very nice day on gold. As a matter of fact, the daily candle closed at 2.8%, one of gold's best showings recently. We had been noticing this last week to where we broke out of the resistance range, which is now support. That was 33.10, roughly down to 32.60, and I was saying if we can establish a nice base right here on the Friday session, I was saying any longs that you guys want to take, right, the stop loss goes below there, and then you're targeting expansion. That trade is now underway, and I did get a piece of that one myself as well. Now, we're looking for the possible second leg of daily leg expansion. Next target remains 34.30 to the upside. Weekly was a bull flag sideways accumulation, similar to what the indexes are doing right now, but a lot wider, right? Just a sideways bull flag accumulation range and looking for the possible breakout. As long as there's uncertainty in the markets, uncertainty surrounding the trade deals, uncertainty surrounding the tariffs, I still do think that institutions will be favoring positions into gold, and we might just be able to see a leg higher into the mid 3400s once more. And that's pretty much it for your index rundown and commodities rundown too. Moving into Bitcoin right now, Bitcoin playing the levels absolutely perfectly. We were noticing last week that it was a daily downtrend, but daily downtrend into where? Into a very large area of support, which was your previous all-time highs. It's the good old breakout and possible retest trade. That area right there was 105.7 down to about 101.8, and their bulls are playing defense here perfectly, at least they have been for the last 3-4 weeks. Could we maybe be seeing another leg of expansion as the dollar remains weak overall and people use Bitcoin as another proxy for dollar weakness in for some expansion? Well, the answer is quite simply yes, but the bulls do have to recapture the short-term time frames first to prove to us that they have the daily back, which will lead to another weekly leg of expansion overall. It all starts with the daily time frames overall, but if I had to take a position here on Bitcoin, it would be quite simple right now. The stop loss would go below this area. 101,000 would be your stop loss area, and the take profit areas, well, the first target would be 112, the all-time highs, and the next one would have to be something psychological like 120 or 125. But all things considered, Bitcoin is not looking too bad, and that's pretty much everything for the indexes, the yields, gold, Bitcoin, and stuff like that. Now, let's dive into some big tech names, shall we? Oops, that's not big tech, that's the portfolio overall. Let's dive into big tech right now, shall we? So taking a look at Apple right now, Apple up about 0.42%. Not a terrible day for Apple, but Apple's just trapped right now, man. Trapped between 196 and about 186 to the downside, which is support, and overhead resistance 210 up to 222. Trendless on Apple. So my favorite way of playing this one, you guys guessed it, playing short puts under the market, under the support range, since we do not have a very clear direction for any swing trades. If you did potentially want to play this swing trade long for just playing level to level in the range, the stop loss would have to go below the lows of last Friday, or 2 Fridays ago rather, 192, and the upside profit target would be roughly 213. Now, Apple fundamentally, guys, has been notoriously slow in terms of revenue growth. At the end of the day, they are paying a lot in terms of tariffs, almost $1 billion per quarter. Their iPhone refresh cycle hasn't been that fantastic, and they are still struggling with AI overall. So Apple, in terms of a long-term portfolio position for me, I mean, I still own it, but I'm not adding any more shares right now. I don't think that this is the best valued company in the market, as the valuation in or around the $200 range is still somewhat on the expensive side, especially when compared with their peers. Moving on to AMD right now, AMD actually getting some lift with the rest of semiconductors, guys, and AMD is trying to go for the daily uptrend reversal. I'll remind you, it was a daily downtrend in which we saw the bulls come into a bit of weekly consolidation mode after a beautiful rally, consolidation on the weekly, looking for that bull flag pattern, same as the indexes, sideways consolidation, accumulation into support, maybe looking for that next leg higher, and the bulls right now are trying to do it. They have to break above the highs of last Thursday, 115.35. You see a break above there. Suffice to say, the daily uptrend is resumed. Your upside targets remain 120 up to 132, and that might be the end of your weekly consolidation leg, in which we could possibly see that weekly leg push a little bit higher. I like AMD right here for 2 reasons. Number one, it's a nice little swing trade that we can possibly have with stops below the bottoms of the most recent weekly lows around the 107 mark. But also, in terms of a longer term play, the valuation definitely does support some expansion, and as the stock is still one of the cheaper plays here in semiconductors overall. Moving on to Amazon right now, Amazon up 0.8%. Amazon still as well trendless, but trying to go for the trend change, right? So daily downtrend, nice engulfing move by the bulls, higher lows trying to be set, trying to go for the daily uptrend. If you see it, that will be a break of 208.44. The daily uptrend break would mean that most likely your weekly consolidation and a sideways flag would possibly be finished. The higher lows are now found on the weekly, and we might just be doing what I've been talking about for the last few weeks on the channel, higher low, maybe go for the expansion zone would be 217 up to 227. So swing trades would be as follows, guys, right? The stops have to go below 197, and your take profits are roughly in the lower 220 range. About a 2-to-1 trade on Amazon, not too bad. And for a long-term fundamental portfolio, guys, Amazon is still one of my favorite companies in the market, in around the lower $200 range. The valuation is quite fair considering their high growth in most most of their major segments. I like it a lot. It's my biggest position across all my portfolios. Moving on to Google right now. Google was down 1.43%, unfortunately, but the bulls haven't lost much ground overall. We know that we had a good old breakout of a wide range of support right down here. Support was 170 down to 160. We're coming back into that area right now. This is almost a daily downtrend. The bears not quite able to get some lift beyond this 169 level. We'll keep an eye on that overall. A weekly time frame makes a lot more sense, guys. Take a look at this, right? It is a weekly uptrend looking for a higher low into support into all the EMAs, and they do have tons of space. Anything right now above 149 looking good. So this one does respect my criteria for a swing trade. If it's a wide swing trade, your stop would be below the lows here, 160, and you'd be targeting expansion levels such as these guys right here, mid 180s to 190s. That is a longer duration swing trade. Google is still one of my favorite companies to also be playing short puts under the market when we get nice red days like this. This was on the top 5 options list yesterday. I myself fired off a nice little contract at the bottom end of support, and I would not mind being assigned on those short puts. Google still very cheaply valued overall. We know why, because their search dominance is coming into question. Weekly MACD though, momentum still looking good, and the bulls still in control of the daily and weekly timeframes. On to Meta right now. Meta, one of your first stocks, guys, to establish the new daily uptrend and go for that new weekly leg. We knew that the bulls were highly in control right now. We were consolidating here. We were talking about this daily downtrending pattern into an engulfing move, looking for a higher low, back testing this level right here, 635 down to 619, maybe looking for the upside progress if the, if the macro and the headlines would have been supportive, which they are right now. And there you have it, guys. Higher lows are established and going for the weekly trend expansion. There's really not much in terms of resistance above us, guys, right? Once we get through these guys here, the mid 670s, all the way to the all-time high 700s, Meta is looking really, really good for some expansion. There's not much in terms of swing trades. The swing trades would have had to have been taken in this lower range down here into support. But if I absolutely had to take this trade right now, the long would be here. The stop loss would be below the lows of yesterday, and you would have to be targeting something as high as the all-time highs and make this kind of a weekly leg of expansion trade overall. Meta, in terms of a long-term portfolio, is still a buy for me. I still have high growth prospects for this company into the next 2, 3, 4 years. In my opinion, guys, in the next 3 years, Meta will probably have no problem hitting almost $1,000, if not even above. Fundamentals right now in the mid 600s still remain fair for the company amidst their very high growth and very good net margins. Moving on to Microsoft right now. Microsoft also having a decent day, but a bit slow, right? Microsoft not really breaking up, still not breaking above the highs, 461. If you do see that break and they follow Meta per se, right? 468 is your next line of defense overall, but if the opposite is true, and we have a bit of a downswing right here and break the lows of 2 Fridays ago, I'll remind you that would be a daily downtrend on Microsoft overall, and you would be looking for some highly anticipated weekly consolidation, right? It's a beautiful weekly leg up. The bulls seem as though they might be getting a little bit tired up here. We'll see if that's the case or whether they pull a Netflix or a Palantir, but any moves lower, guys, you should know that there is some decent level of support. And the biggest one, of course, is 437 down to 425. Now, that would be a big move down on Microsoft. You'd have to have some market moving headlines overall for Microsoft to come down there. But if it does break down, I just want you guys to understand the levels that you're looking out for. I'd be waiting for some pretty large swing trades if it did come down and pick me up down there. Moving on to Netflix right now. Netflix up about 0.97%. Netflix, this is the move I was talking, right? This is like Microsoft right now. Consolidation at the highs and looking for the breakout. Microsoft hasn't done it yet, but Netflix has. So looking very good there. Sideways accumulation range. They never lost the lows, and not even that, they never came back and tested this area of consolidation, literally just riding the 12 EMA at this point. So Netflix remains extremely strong. Blue sky breakout right now, no end in sight to this weekly. This is very tough to chase right now, in my opinion, at weekly overbought conditions. So far from the 12 EMA, your next price targets are going to be probably 1250 to the upside. Right now at 1200, guys, the stock remains expensive. I'll redo the valuation for you guys probably tomorrow, but it is getting very close to a 2 peg and mid 40s forward price to earnings, which even for Netflix, that is expensive, right? I don't mind paying a bit more money for Netflix, talking about maybe like a I don't know, mid 30s, high 30s price to earnings. When it gets into the 40s, we're not really getting a good deal on this stock overall, but I'm very happy to still have it in my long-term portfolio. Moving on to NVIDIA right now. So NVIDIA, 1.67% to the upside, using the support area to their advantage, 136 down to 125. We know that NVIDIA had fantastic earnings. We covered it on the channel, right? Expansion, the breakout. We were talking about the retest. We got the retest. Now, do they have it in them to possibly go for some longs? Well, there is a swing trade here. The stops would have to go below this level right there, 129.30, and then you're targeting the all-time high range. Think about the 150. So fairly decent area overall, guys. The stop loss is about $8 to the downside, and you're targeting about $13 to the upside. So not quite a 2-to-1, but it is not looking too bad at all. Or you can even write some short puts under the market below the support range on NVIDIA, and that would not look too bad. What are the bulls going for here on the weeklies? Just looking for some weekly time frame expansion. It was some awkwardly sideways consolidation. This candle leads you to believe that the bulls are done and might be looking for a retracement, and that might be true, but if that does come into play, guys, short puts below the market, looking pretty juicy. The daily time frame offers some clarity, though, here, in which you're trying to see the bulls go for the retest and the breakout, not looking too bad. And after the earnings, we did their math again on the valuation. And the valuation, in my opinion, even at 140, is pretty fair for the amount of things that NVIDIA is doing in the future. But keep in mind, right, it's a $3.35 trillion stock. It's not going to 2x overnight. So NVIDIA may not move how it used to, but still the fundamentals behind it are quite good. Moving on to Tesla right now. Tesla down about 1.09%, and Tesla coming back into the range of consolidation. We were talking about this range. Here was a bull flag. We got the breakout and never looked back, right? Here, same type of bull flag. They tried to go for the breakout, got rejected, and came back right into it, right? You do not want to see them lose 331.73 to the downside. If you lose that, you lose your expansion criteria, and there may just be an option for a back test and a revision to the downside of the stock into a daily downtrend, and that, my friends, would be weekly consolidation on this name. Good thing the bulls have a lot of space right now, though, right? Anything pretty much above 271, looking for a weekly higher low for possible expansion. The key levels for me remain resistance here, 378 down to 407, and the key short-term level, well, we are right into it right now. If you're trying to still go for the swing trading one, right, it doesn't look good when you have an engulfing move right like this overall, but the stop loss, if you're still in this one, you're going for the breakout, stop loss is still below here, 330 to the downside, and you are targeting expansion into the resistance range. Now that's pretty much everything for Tesla. We got a few more to do, so give me a couple minutes. Moving on down to good old Palantir. So Palantir up 0.2% on the day. Palantir as well has been one that was sideways consolidation, right? Bit of a daily downtrend into sideways consolidation. And we were looking for the bulls to take out these guys right here, which they did on Friday. This is technically speaking a new daily uptrend into blue sky all-time high breakout mode for Palantir, looking very good above the area of consolidation, 125 down to 119. Any longs here need to have a stop loss below this area of consolidation, because that would invalidate the trade if ever it breaks down below there. The bulls have tons of space on the weekly as well, right? Looking very good for possible weekly expansion. It's not pretty, but it is riding the levels a little bit higher. The next targets of expansion would be 140 to 150 at that point. Go with psychological round numbers. You guys already know Palantir is expensive. We did the valuation at 115. At this point, though, it's all about sentiment, right? I'll remind you the three things that drive price action. One is fundamentals, one is technicals, but the most powerful of all sometimes, which disregards technicals and fundamentals, is sentiment. If the sentiment around the company is too strong and there's always more buyers than sellers, the stock will keep going up. Not my cup of tea for a swing trade, but if ever you're in it, those are the levels. Moving on to SOFI right now. SOFI getting some lift as well, establishing a new daily uptrend. The most recent higher low is here, 1285. So where could they might be expanding into? We're going to be looking for expansion into the $14 to $16 range. This is the take profit area for any swing trades that were established at the later stages of last week into the EMAs, which we were commenting on, right? There was a nice little swing trade criteria here, coming with a stop loss below here, 1268. Was not that bad of a trade. A bit tight for my liking. I did not take it, but my favorite way of playing SOFI in the last 3-4 weeks has been selling puts under the market. It's been providing some good premium. Hopefully you guys were able to collect on those trades, as they were part of the top 5 options trades every single week the last 4 weeks. Momentum here on the weekly seems to be wanting to curl, although it's a little bit slow. I'll remind you guys, sideways consolidation. You can argue that this is a bull flag looking for the possible expansion, still looking very good. There is one more swing trade right here if you have wider levels. 12, just follow this yellow line, yeah, 1271 would be the stop loss for a weekly rally above this bull flag, and the take profits are pretty much 15 to 16 to the upside, the top end of this resistance area. For a long-term position, guys, you guys know me, I really still do like SOFI in the mid $13 range. I think the valuation down here is still very fair, and it does lead for some expansion, especially if your time frame is not measured in days and weeks, right? If you're in this one for possibly the next 2, 3, 4 years, I think there's some good value in this stock, and they could really capitalize on the secular trend of digital banking. Moving on to Uber now. Before last, Uber down about 0.62%. We know that Uber's been consolidating here. They got hit down by the news that Tesla was moving forward with their Austin robo-taxi endeavors here within the next month. So they've been coming down, daily downtrend, but we also knew what to expect, right? It was a very, very nice weekly move to the upside. It got very extended from the 12 EMAs. It did get overbought here on the short-term time frame. So a pullback was eventually warranted, and the pullback is now here. What are the bulls looking for? Anything above 71.30, looking for a higher low for possible further trend continuation, guys. Uber was one that I told everybody on the channel that I would be writing short puts down here in the $80 to $77 range. Happy to say that Thursday I was able to get one of those trades off, and I closed it today for over 70% profit. Easy in and out trade when the bulls are in control. Just playing this back test here of the level overall. Uber still looking good in the low 80s for a long-term portfolio as well. Fantastic company, very wide moat in my opinion, partnering with a lot of various autonomous vehicle services, and the valuation does lead for some expansion. $90 to $100 obviously is the next few targets there. And lastly, TSM, guys. Well, TSM up about 0.79% today. TSM establishing the same kind of sideways bull flag, right? Why is it a bull flag? Well, number one, it's above support. 193 to 183 is the support range. Number two, it's at the top end, just like the rest of the market, the top end of a leg, right? The top 25% usually gets you the best results for some follow through. And if the bulls do follow through, your next target is up here, 205 up to 210 overall. There is a bit of a swing trade right here. The stop would have to go below 188. So it's a relatively tight stop. You're going for that bull flag expansion. And as I said, your take profit area would be right up here, 205 to 210. Fundamentally, for a long-term portfolio, I love TSM. It's in my own long-term portfolio in around the mid 180s to low 190s. The valuation is very low right now to forward price to earnings of 20.3, a low PEG ratio, and a decent free cash flow yield. I know that some people don't like this one because there's perpetually the whole Taiwan-China risk behind it, but overall, it's a very solid company, a highly profitable company as well. And with that, that wraps up everything that I had for you guys today in terms of the indexes and your big tech names, swing trades, long-term portfolio positions, yes or no. Now, let's get into some of the biggest losers and gainers of the day before looking into my portfolio, shall we? So if you take a look at the good old list right here, we'll start off with the biggest losers of the day. So Restoration Hardware, not really liking yields. I don't mind this company, but this one is a bit of an asymmetric bet. It's a lottery play in terms of recapture of recapture of consumer demand on high-ticket financed items. This, renovations with Home Depot, Rocket Mortgage for actual mortgages. This is all part of the either home building or home space trade, right? High ticket financed items. So I don't mind buying a few shares here and riding them into the next few years. I think there's an asymmetric bet opportunity right here where Restoration Hardware can find its way back into the 300s, but it's going to take some time and it will get bumpy. And I'm not saying that these are going to be the lows just yet. DraftKings down as well, about 6%. If you guys enjoy playing short puts, you enjoy playing this company as well. You know, below here, below 30 bucks, 29 area seems to be a very decent area of support. Not in this one for the long term or fundamentally as well. You know, the SIN stocks are a little bit tough to play because of all the regulation, but there is definitely a support level here that can warrant possibly some swing trades with the stop below there and targeting weekly expansion to the highs, which would be these guys right there in the low 40 range. Moving on to FSLR. FSLR has just been really topsy-turvy recently, guys. They're trying to go for the weekly, breakout retest. It's been very weak after unfortunately, those government tax credits for clean energy have now been wound down. This one can make its way onto a short put playlist, right? Which would have to be down into the support range, 140 down to 102. It's very cheap fundamentally, guys. This company is absurdly cheap, but it's absurdly cheap for a reason, right? The near-term future for clean energy, especially under the current administration, is not so clear. And then one more that we'll do is probably Wynn. Actually, there's another one on that list that I want to take a look at. Wynn Resorts, you know, some of the resort stocks like Wynn, MGM, right? Caesars as well. They've just been very weak as consumer discretionary demand is very weak. My favorite way to play like the more casino style resorts is just playing Vici, the REIT, the landlord behind the MGM series of properties overall. This one is very good and it pays a very nice dividend. So unfortunately, I'm not one for playing Wynn. It's a fantastic place. I like staying there whenever I go to Vegas or whatnot, but still not my favorite stock to play overall. The other one that I want to bring your attention to, guys, is Adobe. I think Adobe is indeed a buy down here. We actually clipped into this one with the large portfolios today, playing some wheel trades at the 385 to 380 strikes for either this Friday or next Friday. I think the valuation right now on Adobe, we covered their earnings not too long ago. Valuation down here in around the lower 380 to 370 range is fair. That's why I'm playing short puts down there. And the bulls are looking for the same thing as the rest of the market, right? Weekly consolidation, maybe into a leg of expansion, looking pretty good in terms of fundamentally. If you're looking for a company maybe for some risk reversal to the upside, Adobe's been beaten down for a long time. Now might present a good opportunity, guys, to maybe ride some shares perhaps over the next 6, 12, 18, 24 months. Company's doing fantastically and still is one of the best buys, or best deals rather, in terms of the valuation alone down here, and is very interesting, guys, for large portfolios to play the short puts into the lower line of defense support range down there. I talk about this one briefly on the top 5 options videos as well sometimes. Onto the upside, well, CoreWeave, guys. CoreWeave has just been powering through. Seems as though every single week for the last, 5, 6, 7, 8 weeks in a row. Now, in terms of the valuation, guys, the valuation is not that bad, right? I don't have it here on the chart, but take a look at the market cap. The market cap is right here. Let's call it 60 billion roughly, right? If you just measure this on forward price to sales and you go all the way out to 2027 here, right? 2027, 16, and 2028, about $20 billion. It's only trading at 3 times forward 2028 price to sales. I know it's a long time in the future, but this one can see some expansion. There's some very, very bullish price action, very bullish momentum overall on it. It's very tough to swing trade this one overall. The option chain is very pricey because the IV is high. My favorite way of playing this one, I'll show you in a few moments, guys, playing short puts well below the market. The volatility is very high. We're able to get some 90 down to 70 strikes depending on the day, depending how red it is on the day. 90 down to 70, decent area to be playing some short puts overall. Zscaler is one. It's just been moving higher and higher and higher after their earnings last week. We did not cover them on the channel. A little bit overbought for me, both on the weekly, but this one, guys, really going for it, right? The all-time highs are all the way up here. Next stop, 321. Very tough for me to position right now. You are very late into this trade. I would not be chasing this one overall, but anybody who's in, that is your take profit range. Looking very good. Congratulations to all the bulls in there. Etsy also doing numbers here today, guys. Etsy going for possibly, right? Looking for maybe a weekly cup and handle. We'll see if that's the case, but any back test down here of the lower $50 range could provide a nice little swing trade entry if you're looking for some expansion into that $60 to $70 range. Etsy's just been destroyed recently, guys, in terms of that consumer discretionary spending, right? But that is a trade opportunity that I might see myself there. And lastly, we're going to cover Chewy. Chewy's just been on an absolute tear. We covered this one last week as well. 4 or 5 weeks of upside in a row, looking very good. Weekly trend expansion. I'd be very happy if I was a Chewy right now, which I am not, but any pullbacks could offer some decent opportunity to sell some puts below the market down there. Right? Overall, a bit tough for me to chase this one, just buying into it right now. I think you're probably a little bit late on this one. Fundamentals, though, I mean, we didn't do them since 31. I assume they must not be too bad. The price to sales is going to be the one to watch on Chewy. Right now, the market cap is about $20 billion. And in one given year, their margins are not that hot, right? But if you're measuring on price to sales, this year sales is about 12. So what is that? About a 1.5, 1.6, 1.7 price to sales. It's not terrible, but the best deal on Chewy was definitely down there when we did cover it on the channel for those purposes. And that's pretty much most of all your names to the upside. I know there's a bunch of semiconductor names right here. Those can be encompassed into SMH, so I'm not going to go over those each one individually. Micron we talked about yesterday, mind you, and ANET. We talked about those in the top 5 options videos. Micron, in my opinion, great to sell puts down here into the mid 80s, and ANET, same concept, right? ANET down there into the low 80s or under 80. Fantastic company to be selling some puts on. Swing trades, I mean, they're just going to move in line with the rest of semiconductor and the data center trade. That's pretty much everything I had for you guys for the biggest losers and gainers of the day. We'll try to cover as most of these as possible. Obviously, I can't spend 2-3 minutes on each one. It would be too long, but just going to give you guys some initial thoughts, some initial levels that might be interesting to your analysis, right? So that's everything I had for you guys there. Now let's dive into the portfolio, shall we? And the trades that I made today. Okay, so when I do the portfolio, I'm first going to start off, I'll show you the positions after in the actual portfolio, but I'll start off with this page here because I think it's the cleanest way of viewing it, especially when I do a lot of things at the same time during a day. SOFI covered calls, we had this week's covered calls at 13.5s. Now we rolled out to next week covered calls for 18 cents in credit. We have 200 shares. We've been getting some fantastic premium on them, and I'll show you guys. Now, on this assignment, which we got assigned a long time ago at this rate, guys, take a look at the average cost right now on SOFI. It is actually very cheap. We're currently sitting at $11.08. We got assigned as a lottery play after their earnings 2 quarters ago at $16. With all the covered calls at 1 DCA, we were able to bring this cost basis down to $11.08. So if I get called away at 13.5, I'm fine with that. We just keep collecting over 1% per week in premium. Very happy. SOXL is one that I also got assigned 2 weeks ago. I again rolled to this week's calls, which we had for 39 cents. We got 38 cents to roll them again. That is over 2.5% for next week. We've just been in this stock not very long in terms of assignment, and you can see the average cost down here is now 13.95 after getting assigned at $16. We've done a great job of bringing our average cost down with covered calls, and that is the power of a wheel strategy on some of these very volatile stocks. Now, Uber, you might remember one of the Uber, these are all wheel positions, so take screenshots of this page and watch the commentary again if I'm going too fast. Uber, we had this one at 37 cents from last Friday. Or last Thursday rather. We closed it today for a very handsome profit, about 70%. You can see that here, 73%. Close that off for about 10 cents. Thereafter, we opened 3 new wheel trades today. Rocket Mortgage, which was on the top 5 options list yesterday, $12 puts for 15 cents. I've been playing this one on a recurring weekly basis in around the $12 to $11 range. I think there's some nice support down there, and it is a very, solid company in terms of what they're doing, but obviously they're beholden to interest rates, which is why they're not seeing the most amount of lift as of recently, right? Moving on to Google, we took some Googles early in the morning, guys. We got the 162.5 for 73 cents. This as well was a play that I described yesterday on the top 5 options video. A lot of my members got this one as well. Sitting very nice right now. This position currently, guys, is sitting in a very handsome profit already, right? Here's the position. We got into it for about 73 cents, and you can see it's about half off, more than 50% in one single day, as we were able to clip the lows of the day on that. And lastly was CoreWeave. CoreWeave this morning, when it saw a little bit of weakness, we got the 88 puts. That was 20+% away from the current market price in the morning. By Friday, we got 45 cents. Respecting the 0.5% rule right there. And you can see that from this position right here. Here's the CoreWeave's 88. 45 cents, and they are now more than 50% profitable overall. So very decent day for us. We also benefited from some position closes. I'm trying to wind, I have a lot of call debit spreads here, guys, I will admit, and I told my members today, I'm going to simplify the portfolio and kind of de-risk the call portion of it, because I did open one trade that I forgot to put on the spreadsheet, mind you. I closed some of these to open up some capital for something else that I did. So I closed the ALAB, closed the NVOs, closed the Googles, and closed the Brown, which was the insurance play that we kind of took. Brown wasn't moving too hot. Google was a post-earnings play. NVO was coming into target, and ALAB was well above the target. I'll show you guys those closing trades right now. So they're all in here, shares and calls. Here's the NVO. Close this one for 20% ROI. Not the most phenomenal, but it was moving into target. Bro, right here, Brown Corporation insurance play, 12% ROI, guys. It just was not moving, right? And I'm all for giving some stocks some time to move, right? We were in this one for a month. Perhaps after I close it, it will start rallying, but I'll show you guys what I deployed the capital in, and it's all gonna make sense why I was closing some of these positions to kind of pivot from call debit spreads, which have 2 to 3 months of time, to something that has almost 2 years of time. It's a lead contract, right? And the other 2 that we closed are in this section right here. They were lottery positions overall. When we opened them, ALAB was an earnings trade. This last contract was 108%, so a 2x on that one. Pretty healthy overall. overall. And lastly, Google, we had this one after earnings, 22% ROI. I will admit, I would have had a better job of closing this one last week, right? When it was a bit higher, I could have got $1.75 for those, which would have been better ROI, but I can't complain, right? All of that capital was used to take another trade, which I'll show you right now. It's been one that I've been talking about for a while on the channel, guys, and it was XLV, right? I'm looking for the bottoming out process for healthcare lagging behind the SPY, severely lagging behind the SPY, as a matter of fact. If I put the SPY on this as a percentage scale, you'll see how severely lagging this sector actually is, right? Here we see some divergence. SPY is pulling up higher and XLV is pulling down lower. I love to find these divergences for very important segments of the market. And you can see that right here. We have one XLV leap call right now, $130 call. We got it early this morning for $15.35. And right now it's largely trading in around the exact same value. So these are all the remaining positions. You guys probably would have seen them on the options list that I presented to you, like the portfolio tracker list. But just so you guys can actually see the positions, they're all right here. Take screenshots if you want. Those are all the either leaps or wheel positions. And these down here are all the combo trades, or otherwise known as the call debit spreads. As you can see, the leaps on Amazon and Micron are maintained with some very healthy gains on the positions overall. And that is everything I had for you guys for the portfolio recaps and the overall market analysis. Hopefully you enjoyed that. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Consider subscribing if you're new. Would love to see you back. And lastly, if you have any questions, always feel free to leave them down below. Stocks, options, macro, anything you guys want. I'm always happy to answer your questions down below. And lastly, if you guys wanted access to all of these various types of trades in real time, right? You guys know that we run a lot of wheel trades overall, but we do take some directional bets like you saw with the call debit spreads, the leap call contracts, sometimes some swing trades with shares. You get access to all the various types of trading strategies that I do on a weekly recurring basis. The link to that is down below in the description. You also get access to all our market live streams, which we do in the mornings at the open for about 2 to 3 hours every morning, where I trade live and take all your questions on your stocks, your options, your long-term portfolios. If you can't watch them, they're always recorded, so feel free to watch back after. You can ask me all your questions in real time throughout the day on your stocks, your options, everything in between. And I give very full answers when you guys answer, not just yes or no. When somebody asks me an option question, I'll give you a paragraph and my actual thoughts, right? Now, furthermore, you also get access to our private videos in which I teach a lot of the option strategies that I don't really talk about too much on the channel. Very detailed fundamental analysis videos, technical analysis videos, how to grow portfolios from small to medium to large, what allocation in the portfolio, depending on the size, should be in what trade type to really give you the best bang for your buck overall. And last, you get access to all my charts, right? All the technical analysis you see on the charts, you copy paste all my watch lists, all my charts, and whenever you guys see the annotations and technical levels, right? When you see the support resistance boxes and all these fundamentals, you just 2 clicks of a button, you get to copy paste everything. It's just an added bonus for our members. If any of that sounds good to you, the link is always down below in the video description. Hopefully I see you in our community soon. Very fun community overall. And if not, I guess I'll see you back on the channel, guys. That is it for me. Hopefully you guys have a very good day of trading tomorrow and a beautiful rest of the week, right? Take care. I'll see you guys soon. That's it for me, and peace.